Hello, and welcome to my individual presentation for ICT 4375, which is cryptocurrency, blockchain, and Web 3.0. Today, I'll be looking at estate planning for digital assets as a custody service, or DACS. Today, we'll be looking at contractual law and regulation, digital asset storage and privacy, as well as business use cases. Answering the question of what is blockchain, digital assets, and why is it important for investors? Taking a look at this chart by coinmarketcap.com, it shows the total cryptocurrency market cap from April 29th, 2013 through August 10th, 2022 on a linear scale. The cryptocurrency industry has an estimated value of 1.782 billion as of 2022 and is growing rapidly, expecting to grow by 420 billion by 2027 in a post by Research and Markets. There are over 20,000 different cryptocurrencies available as of August 2022, according to coinmarketcap.com. The highest market cap representing Bitcoin, Ethereum, Tether, which is a stable coin, US dollar coin, which is a stable coin, BNB, Cardano, XRP, Binance, Solana, and Dogecoin. In recent regulations, it seems that the current White House is stepping up on regulatory efforts towards cryptocurrency. And a post in the White House briefing room on March 9th, 2022, states that President Biden is to sign an executive order on ensuring responsible development of digital assets. And just some key highlights from this fact sheet. There's a focus on protecting US consumers, investors, and businesses, protecting US and global financial stability and mitigate systemic risk, mitigate the illicit finance and national security risks posed by illicit use of digital assets, promote US leadership in technology and economic competitiveness to reinforce US leadership in the global financial system, promote equitable access to safe and affordable financial services, and to support technological advances and ensure responsible development and use of digital assets. So there are several regulators for cryptocurrency, including FinCEN, which is a department within the United States Department of Treasury and the United States Federal Reserve System. FinCEN states that currencies must represent a physical location, like a sovereign country, and treats digital assets more like investment companies or registered investment agencies, and would be governed by the US Securities Act of 1933 and 34, as well as the Investment Advisors Act of 1940 and the Sarbanes-Oxley Act of 2002. There's a strict protocol that digital assets must provide know your customer and for customer authentication, oftentimes using a GUID for several different attributes that can be used to detect a user's identity, such as email, a social security number, driver's license information, and so forth. And there's a lot of good business use cases on how to present identity online to prove identity for your blockchain or your digital wallet. This views digital assets as revocable gifts. Central banks define currency as reserves in the form of settlement accounts at central banks and currency in the form of banknotes available to the public. Now, the Department of the Treasury defines cryptocurrency as a digital currency wallet is a software application or other mechanism that provides a means for holding, storing, and transferring digital currency. A wallet holds the user's digital currency addresses, which allow the user to receive digital currency, and private keys, which allow the user to transfer digital currency. The wallet also maintains the user's digital currency balance. A wallet provider is a person, individual, or entity that provides the software to create and manage wallets, which users can download. A hosted wallet provider is a business that creates and stores a digital currency wallet on behalf of a customer. Most hosted wallets also offer exchange and payment services to facilitate participation in a digital currency system by users. Taking a look at digital storage and privacy, how is data like digital assets stored and information kept private on the blockchain? Knowing that cryptocurrency is looked at like an investment product, like stocks, and federal regulators recognize it as such, these independent agencies are required to publish prospectus and other financial documents for regulatory purposes. And cryptocurrency currently does self-regulate, but there could be means for future regulations to try to make this a standard mechanism, like investing in a stock that would have a prospectus with its initial public offering. Currently, there are several cryptocurrency products that offer what is called white paper that I'd compare to a prospectus and other kind of documentation requirements for what is this investment, how does it keep users safe, and so forth. Currently, Bitcoin, Ethereum, Tether, Solana, and Binance are some of the cryptocurrencies that offer white paper online. And here are some links that you can use to access those white papers for these cryptocurrencies. Now, when cryptocurrency was first introduced with the advent of Bitcoin, there was a huge direction on making it economically feasible through software. And so a new cryptocurrency block is created every 10 to 12 minutes and then is mined and then transferred to new users. And so all of this is part of a public network that protects investors through hash networks, digital signatures, elliptic curves, Merkle trees, consensus mechanisms, and digital proofs. And to access your own wallet or digital assets within the blockchain, you would use your private key, which is never to be shared with another, which can be hosted either by the user himself or herself or a third-party service that holds assets like a custodian, or it can be held publicly on the ledger itself. Here is a diagram showing a Merkle tree and the various transactions, so forth, with the Merkle root. And so to kind of look at the different types of blockchain wallets that are available, can be broken down into hot wallets and cold wallets. Hot wallets connect to peer networks on by one interface, most often through a desktop on native networks, or can be connected on cloud-based public networks that connects users on multiple interfaces like web and mobile. Or a user can keep their private keys and data offline with a hardware device like a USB that they can use to store their private keys. Now, for business use cases for hot wallets, in particular, these are hot wallets that users store or self-custody private keys and is inexpensive and moderately secure. Some examples include Exodus, Electrum, BitPay, Atomic Wallet, BRD, and blockchain.com. Or private keys can be held by a third party or custodian service. Sometimes this is said that, this is the most convenient and easy way, but sometimes is at risk because a third party does have your private keys, and this could pose a problem when you pass on. You need to have means for your designated representative or the executor or executrix of your estate to access private key information, so that way assets can be given to beneficiaries and so forth. And I'll get into that in a moment, but these services that hold your private key are Binance, Coinbase, and MetaMask. Now, cold wallets are hardware-based, are the most secure and the most responsibility for the user to keep and track and maintain information, but they offer a reliable service. Private keys are stored on a USB device that is connected to the network to make transactions. And examples of business use cases include Treasure and Ledger. Getting into some more of the business use cases here, and what that means for estate planning. Some users prefer to keep all data, private keys, and transactions offline and use paper wallets that are stored in private safes and vaults on paper documentation. This provides a self-service use case from estate planning that users must prepare themselves. If you are estate planning for your digital assets, it's important that you prepare this cold wallet type information in a place that your designated personal representative, such as your executor or executrix, can access in the event of your passing. This must include information like recovery phrases, types of digital assets held, and private key information used to access digital assets to be shared with the probate court or listed beneficiaries. Deloitte states that the need for digital assets custody is undeniable and critical to the widespread adoption of digital assets. The digital asset management solution providers are commonly referred to as digital asset custody providers, combining the highest level of certified security for safeguarding multiple asset classes with full lifecycle management services. Custody services can be broken down by services provided to institutions and both software and hardware solutions for consumers on an as-needed basis for estate planning. So, since the regulators aren't recognizing cryptocurrency as an asset at the moment, banks are not recognizing them or custodying cryptocurrency as an asset at the moment. And this has led to a shift in how financial assets are being managed and looked at, and has given rise to technology services and providers bridging the gap for investors. And they're coming up with all of these different business use cases to provide crypto custody solutions, filling in the gap for the lack of governmental regulation and the lack for financial institutions to look at cryptocurrency as a valid asset. And so some of the services that banks provide, like estate planning and being able to name individuals as beneficiaries, is one of those solutions that these crypto custody solutions are looking to provide. Now, these services are primarily broken down, as you can see in this picture, from institutions and consumer. Most of them being developed for institutions and some of them being developed for consumers. Some of the examples of custody solutions for institutions include Fireblocks. Thousands of crypto Web3 and digital asset businesses use Fireblock software and APIs to custody, manage treasury operations, access DeFi mint and burn tokens, and manage their digital asset operations. So Fireblocks would be mainly for municipal bonds and bonds, institutions that hold bonds. Anchorage Digital, Anchorage.com, our clients safely participate in digital asset markets from custody to trading, finance, staking, and governance, all from the world's most advanced and proven security architecture. And as one of the most trusted crypto partners, Anchorage enables institutions to become leaders in the new crypto economy. Gemini, the most trusted crypto native finance platform, and Fidelity Digital Assets, digital solutions trusted by leading institutions around the world for platform and investment solutions for institutions, as well as the custody solutions for consumers, which include the hardware solutions like Treasure Wallet, Keys.Casa, Casa, which provides private key management, multi-signature wallet, Bitcoin custody, and Bitcoin security. And then Unchained Capital, which is security with the control of self-custody and the benefits of a managed financial service. So we get these software and hardware type custody solutions for consumers. And taking a look at what information you would need for estate planning with hot wallets depends on what information you're sharing with that service and what information you're required to write down in the creation of a blockchain wallet. So it's very important that you're paying attention when opening new accounts and that you're doing due diligence when investing in new cryptocurrencies to include reviewing blockchain or reviewing the blockchain or the cryptocurrency white paper to make sure that this is an investment that you identify with. Consensus mechanism is used in the Ethereum network to do proof of work and proof of importance and things like that. But hot wallets provide and identify a personal representative for the estate with description of the wallet, operating system, long-form private keys for seed, or BIP 44 recovery phrases. Currently, there is a need to develop services that allow for estate planning in connection with holding and storing digital assets which makes a good case to custody digital assets for consumers and institutions. Because digital assets are not currently being held by a custodian like a financial institution, this has allowed technology services to pioneer services for both consumer and institutional investors to provide services that a bank normally carries out as normal business and operating procedure. In working to provide investors more information with requirements documentation and white paper, and utilizing blockchain as a service that eliminates the need for brokers and a centralized authority using blockchain and Web 3.0. In conclusion, some key points. Cryptocurrency is a revocable gift that currently isn't recognized for custodianship by major banks and financial institutions as of 2022. This has provided some opportunity for technology companies to provide these custody services that banks normally provide, like estate planning, check writing, and so forth, when it comes to account setup and account maintenance and that sort of thing. It's important because cryptocurrency currently doesn't have any legal tender status backed by a nation. They're not recognized by FinCEN, but they are regulated like an investment company or an RIA. Banks typically provide depositors and investors the ability to name beneficiaries of assets or work with representatives designated by probate courts. This has led to many services being operated by both custody of digital assets to replace banks on services they typically provide, like estate planning, and customers should do their due diligence before investing. Thank you for listening to my presentation.